All right. Good morning. Good morning. Good morning. My
Good
name
morning.
is Cynthia Lubin. I'm a real estate agent with Remax First Realty 2 in Cranford, New Jersey, specializing in residential real estate sales. This morning, I have with me a special guest. I have Mr. Mark Slepian from Guarantee Rate Home Mortgage. Good morning, Mark.
Good morning, Cynthia. How are you?
I'm doing great, and you?
Fabulous.
Awesome, awesome. Thank you so much for being
Thanks
here.
for having me. Absolutely.
So, Mark, with that said, please, introduce yourself. Please tell the audience a little bit more.
Thanks, Cynthia. Mark Slepian, as Cynthia said, with Guaranteed Rate, national company based out of Chicago. My office is in Parsippany, New Jersey, but I cover the entire state as well as a few other states. I've been in the business a very long time.
Mm-hmm.
Actually, going on 29 years, which is
Wow.
kind of scary.
Goes
Longer than
by
most people
fast.
have been alive that I deal with today.
Mm-hmm.
Um, but yeah, so long time in the business. The last 3 years, I've been specializing in renovation financing,
Mm-hmm.
which is really booming.
Mm-hmm.
Everybody's seen HGTV with all the different shows, Property Brothers and Fix or Flip, and that's what I specialize in is helping folks who want to buy a
Mm-hmm.
fixer upper, or someone who wants to refinance and expand their home. I work with a lot
Absolutely.
of real estate agents to help expand their inventory because that seems to be the hot point now is lack of inventory.
Absolutely.
So that's
As an
what we,
agent, yes, it
yeah,
is a dilemma.
yeah. So that's what I specialize in. So.
Awesome, awesome. First, actually, tell me how you got into mortgages.
Well, I was in sales
Mm-hmm.
way back when, and I was working for ADP selling
Mm-hmm.
payroll.
Mm-hmm.
And one of my coworkers, her account was Champion Mortgage.
Mm-hmm.
This is going back to 1991, and she just kept raving about the people there. The people
Mm-hmm.
that she dealt with, the employees. And I had been looking to make a move, and so she said, "Well, let me see if I can get you an interview."
Mm-hmm.
And she got me an interview with Joe Gorieb, and
Mm-hmm.
Joe
Wow,
is
I
one
remember
of
that name.
he's the founding
Mm-hmm.
family basically of Champion, and that was 1991. I didn't even think I could spell the word mortgage back then. I didn't know what it
Mm-hmm.
was,
Mm-hmm.
and so I came in, and from there we just took off. It was a family run business,
Mm-hmm.
and they really did a fabulous job of preparing people,
Mm-hmm.
to get into the mortgage business. So that's
Mm-hmm.
how I started.
All right, awesome. So you mentioned you have been doing mortgages for the past 29 years. I'm
Yeah.
sure you've seen a lot. What do you like most about the process? What is like a most memorable experience for you? I could go on, but
Yeah, I mean, I've seen. There's really nothing I haven't seen.
Mm-hmm.
The business is um, had many changes over the years. I mean, certainly in the early to mid 2000s is when the mortgage meltdown
Yes.
happened.
Mm-hmm.
Because back then, if you were sitting upright, you got approved for a mortgage, and
Mm-hmm.
I don't say that lightly because it was just
Literally.
property values were increasing, and unfortunately, people were using their homes as ATM machines to
Yeah.
pull cash out, and so it was kind of the wild west.
Mm-hmm.
And then the bottom fell out,
Mm-hmm.
and it was not just the mortgage industry; it was the economy, it was everything. Property values plummeted. People were now upside down on their mortgages.
Mm-hmm. Mm-hmm.
Short sales became prevalent. People were. I mean, it was a nightmare,
Mm-hmm.
and yet the people I work with today are the people that we stayed in the process. We
Mm-hmm.
we, we kind of forged on and found our way through it, and then things started to change around the 2010 2012 time frame. So the process itself has changed.
Mm-hmm.
Where it used to be very easy to get approved,
Mm-hmm.
it's much more difficult now. And yes, there's talk today about recession and people concerned about values going down. And in my opinion, it's not going to be anywhere near as bad as it was back then,
Mm-hmm.
because it's much more difficult today to get approved.
Mm-hmm.
Lenders still look at the same three things.
Mm-hmm.
We look at credit, collateral, capacity, the three C's.
Absolutely.
Your credit score, how much money are you putting down, and can you verify that money? Okay.
Verifiable
Right,
keyword.
exactly, and then your capacity, which is your ability to pay the loan
Mm-hmm.
back.
Mm-hmm.
Do you get a W-2? Are you self-employed? So you have to document everything, and
Mm-hmm.
and for the most part, if you've got your things in order, and you've got decent credit, 700 or higher,
Mm-hmm.
you can verify your income and you can verify your assets. The process is not difficult,
Mm-hmm.
and that's where it runs into challenges is when people don't tell you up front. They
Absolutely.
give you
Mm-hmm.
misinformation.
Mm-hmm.
And then a lot of times it's a very competitive market. So, lenders today, there's a lot of lenders out there who just want to get clients off the street so they don't shop.
Mhm.
It's very competitive. So they'll tell them anything they want to hear.
Absolutely,
And
yeah.
you'll get a pre-approval where maybe the loan officer hasn't even looked at anything. Maybe they ran a credit report, but they didn't look at W-2s, they didn't look at pay stubs. They didn't have the client document their assets. And that's where it gets to be
Absolutely.
a challenge. So it's a difficult process, but my company, Guaranteed Rate, does a phenomenal job of getting everything up front. So as you're not wasting your time.
You kind of touched upon one of my questions. You mentioned process several times. Like, it is a process. So from your perspective, and with your experience, what would you say is the best process a buyer should follow, that's looking to purchase a home?
Yeah, the things that a buyer can do to get themselves prepared, pretty simple. Make sure that your credit score is good. Make sure your bills are paid on time.
What's a good score?
Well, you'd love to. 740 is kind of the penthouse, so to speak. Anything over 740, you're going to get access to the best programs that are out there, because everything's based on risk. So when lenders, and the rates all come from the same place. So it's not as though I'm going to offer somebody, 3.75 and they're going to get 3% somewhere else. It just doesn't exist that way. The rates all come from the same place.
Can you name that place? Or when you say the place?
Well, from where, let's say it's based on where the market is.
Okay.
So so interest rates are going to be based on what the market is doing, and there's a number of different variables that affect that. But when our secondary departments of all the different lenders, when they price things out, and it's done every day, they start at, when the market opens at 9:30, that's when they're starting to look at where rates are going to be for that particular day. So that being said, as a buyer, you want to make sure your credit's in line. You want to make sure, if you have a job and you've been there a certain amount of time, you get pay stubs, you get W-2s, and it sounds so simple, but we take it for granted. If you've got your assets, let's say you have checking and savings. One big thing that came out after 9/11 was the Patriot Act, and that's where any money that's in your account as a deposit that's over and above your direct deposit for your job, you have to be able to source that. Where did it come from? Because the government says, hey, we're trying to make sure that there's nothing funny going on. And so if you're, let's say your direct deposit for your job is $2,500 every 2 weeks, and you have a $8,000 deposit.
Where did that come from?
Where did it come from? Oh, that's cash. Whereas we hear the term cash is king, when it comes to the mortgage business, cash is not king. Okay, unless you're paying cash for a house, if you have cash deposits, you have to be able to document that.
Exactly.
Okay, so for the buyer, you want to make sure your credit's good. Okay, on time. You want to make sure you can verify your income and verify your assets. If you can do those three things, the rest of it kind of falls into place.
It falls into place. Do you recommend buyers look for homes prior to getting pre-approved, or?
Well, that's what most people want to do, and it's so easy today with Realtor.com and all the different websites, and but what they should do, and agents often tell them that the first question you ask a potential client is, "Are you pre-approved?" Right? Because again, if there's no point in looking at a house where it's pie in the sky if you can't get qualified.
Absolutely.
So we always urge clients, get pre-approved. And Guaranteed Rate, we have a tremendous opportunity for folks. We have a digital mortgage application, so they can actually apply right on their smartphone, or they can do it in front of their computer, and they can get pre-approved within a few minutes. When a client goes onto my website and applies, the minute they start the application, I get notified.
Wow.
And the minute they finish, I get notified. So then I can immediately call them and say, hey, I've got everything in front of me. They can upload all their documentation right through their own secure portal, and then I can get them pre-approved.
I used to have like these huge folders. The 1003 is like the legal size, application, and go through each question with them so they can do it on their own.
Yeah, and there's a lot of people that still do that old school way, and I used to do that. The only problem is if you're on the phone with a client, and maybe the client has an accent, or maybe they're a low talker, or because if you misspell something and then it goes on the application, you got to start over, and we don't want that. So that's where we direct people: go to the digital app, fill it out yourself.
Yeah, and if I have questions,
it takes 5 to 8 minutes. That's it. It's nice and quick.
So simple.
It's very simple.
Awesome. So is the You mentioned renovation loans, that's your
Hmm.
specialty.
Yeah.
Is the process much different for a reno?
It's really not. I mean, we follow with whether there's an FHA loan, okay,
Mm-hmm.
which is Federal Housing Administration government insured loan, or Fannie Mae. People have heard those terms before.
Mm-hmm.
So the beauty of that is that Fannie Mae offers a product called a home style
Mm-hmm.
renovation. FHA is called a 203K. Most people have heard of that.
Mm-hmm.
We follow the same underwriting guidelines as a traditional mortgage.
Okay.
So there's nothing different.
Okay.
There's a couple more moving parts with a renovation loan where you need a contractor, we need
Mm-hmm.
some estimates. So there's a few more things involved.
Mm-hmm.
My job and my team at Guaranteed Rate, we specialize in renovation. So my renovation team, all they do is renovation.
Okay.
And they know it really, really well. So
Mm-hmm.
I can turn a loan around almost as quickly as a traditional
As
loan.
a regular loan.
Yeah, it just depends. Again, it depends how established the client is with, do they have their
Mhm.
things in order. I have a potential client that I got yesterday who has to close November 29th on a
Mm-hmm.
renovation loan.
Mm-hmm. Wow.
And, unfortunately they got turned down by another lender. The home needs work.
Mm-hmm.
The lender knew it and for whatever reason thought they could get it through as a traditional loan.
Wow.
And lenders, a lender is not going to give you a mortgage on a property that's got health and safety issues. Just never going to happen.
Absolutely not.
So that's where it goes to
Yeah.
a renovation loan.
Gotcha. So they won't be in their house by Thanksgiving, but maybe
No.
Black Friday or something.
Yeah, that's right.
Handle that. Take care
That's
of
right.
them. So can you talk about like where rates are now?
Sure.
Are they good? You mentioned,
Yeah, it's been an interesting year. If we rewind a year ago this time, rates were pushing the high fours, almost 5%, and the talk was that the Fed was going to increase rates up to 4 times in 2019.
Mm-hmm.
That's where the market was going. And Fannie Mae and they do their assessment on their projections for the year, and they were just talking about this is what kind of volume we can expect. And through no understanding, because
Mm-hmm.
it's funny that people say, "Oh, I know the market." You don't know the market.
Mm-hmm.
We have people that within our company and deeply entrenched in the stock market and the bond market, because bond market typically is what affects interest rates. We know people who are experts,
Mm-hmm.
and they can't determine.
Mm-hmm.
They
Where
can.
it's heading.
No, nobody
Mhm.
knows. It's because again, the stock market's emotion. It's
Mhm.
based on emotion, so we don't know where rates are going. And then people look to us and we say, well, based on historical data.
Mm-hmm.
So going into 2019, we were bracing for the worst,
Mm-hmm.
and something happened.
Mhm.
The switch got flipped, and then the 10-year Treasury, which is a good indicator of mortgage rates, that started to tumble.
Mm-hmm.
Last November it was pushing 3.25. Today it's around 1.78, which doesn't sound like much. That's tremendous. So
Mhm.
rates that are pushing 5% dipped all the way down to like the mid threes.
Mm-hmm.
They've spiked a little bit. October was kind of inchworming up a little bit,
Mhm.
and right now they're still below 4%.
Yeah.
So historically, you can't beat that.
Yeah.
Because
No,
when you think
it's
about
great.
the tax savings, assuming you can get a tax deduction, your after tax rate,
Mhm.
if your mortgage rate is 3.75, your after tax rate is going to be in the twos.
Absolutely.
And
people don't factor that in all the time.
You don't factor
Yeah.
it in, so. But we always talk about payment because honestly, the difference between let's say 3.75 and 4% on a rate,
Mhm.
the monthly payment difference, it's not much. It's a
Mhm.
couple dollars a month.
Mhm.
So I try to educate my clients and say, listen, rates are important because that's what drives your payment, but
Mhm.
focus on the payment.
Absolutely.
You
Can
don't think
afford
about
it?
you don't think about your credit card interest rate, your car
Mhm.
interest rate, anything else, your student loan interest rate. You think about the payment.
Is
that's
this
what we
the
try to-
most affordable option for
Right.
you right
And
now?
and
kind
we're
of thing?
our guaranteed rate, our name guaranteed
Mhm.
rate.
Guaranteed.
We guarantee it. But we always look to educate the clients and put them in the best possible scenario. We don't control interest rates. Okay, when I meet with a client, where in the past you could never really share
Mhm.
much information, now it's completely transparent. So if I'm sitting with a client, I'll show them my laptop. I'll say, look, here are the rates today. You pick the rate that you want.
Absolutely.
It's not a matter of
Yeah.
it's not my rate.
Mhm.
It's what the client qualifies for, and
Mhm.
that's where going back to credit's the number one factor. When Fannie Mae assesses their parameters, and it's all their algorithms and how they it's all based on risk. So if you've got a client with, let's say, a 675 credit score versus someone who's got a 780 credit score, just based on history, the client who's got the high 600 score has a higher propensity to be late on a payment or to incur more debt or what have you, because there's a reason their score is where it is. So Fannie Mae factors that in, and that's where they determine the pricing. So if you, let's say, you have a rate of, the base rate is 4%, but you've got somebody who's got a 650 credit score and they have a lot of debt and short term of a job, there's more risk. So there's going to be what they call add-ons. There's going to be premiums that are going to be added to that rate. So the base rate may be 4, but at the end the rate may be 4 3/8 or 4 1/2, just based on what they qualify for. And that's what I try to explain to clients. It's like, look, I don't determine. I am showing you what you qualify based on what you are bringing to the table.
Exactly, and that's all you can do.
That's it.
That's all you can do. So, I mean, recession or not, like, what do you think? Are we heading towards, or?
It's hard to say. Now it's a great time to buy. The rates have made it very affordable for people. I always tell clients a good rule of thumb is for every $5,000 you borrow, it's about $25 a month on your payment. So you can kind of ballpark where your payment is going to be. Everyone's situation is different. The client who says, "Oh, I'm going to wait," I always ask, "Well, what are you waiting for?" And not to be disrespectful, but what are you waiting for? If you're
down.
Rent. A lot of people rent today, and rent's certainly a viable option for people if they don't have the money. But if you want to be a homeowner, it's a great time, and that's where I can help. And we've discussed this on the renovation side, because when someone can look at renovating a property, they can get into a home much less expensive, and then they can, create their dream home.
Absolutely.
And keep it right at their budget. So that helps them expand and gives them more opportunity to buy a home.
Absolutely. I'm all for 203Ks. I like the fact, like you said, you can create your dream home, because if somebody else creates it for you, they're going to want their money back.
That's
you know
right.
what I mean? But if you put the work into it yourself, you
That's
can
right.
walk away with a great deal. So I'm going to head into my next segment, the myth versus truth. Like, in your experience, what's a myth that you often hear and you're like, oh my God.
There's so many.
All right. Well,
one big one, which is prevalent now, is when the Federal Reserve, has a meeting, and they're going to talk about, increasing rates, cutting rates, keeping rates the same. So folks hear that and they automatically assume that means mortgage rates, and it doesn't. When the Fed is talking about rates, they're talking about the overnight rates, the rate that banks lend money to each other. So typically that's short term. That's going to affect your car loans, your credit cards, your home equity lines of credit. Doesn't affect mortgage rates. And 99% of the time, by the time the Fed is meeting, the lenders have already priced in what they're going to do.
Okay.
So when
it's not even a surprise.
It's not a surprise. So when the Fed does something like, if they cut rates, whatever it was going to happen on the mortgage side has happened weeks before that. So they project.
Gotcha.
So that's a myth that folks have, is that the Fed cut rates. No, it doesn't affect mortgage rates at all.
Okay.
So that's where you need to talk to your real estate professionals, your mortgage person, your realtor to get the information. One thing I always use with clients, Cynthia, is when you're on a website and you're just reading and you're looking at different information, there's drop down boxes, and you click a drop down box to get more information. So that's what I advise clients to do. It's like, just click the drop down box, ask more questions to educate yourself.
Awesome. Love it. Thank you so much. I think we're approaching the last few minutes.
Okay.
I call it dropping jewels, but some last words that you want to give, that you want anyone that's potentially looking to buy, refinance, or anything, that you want them to walk away with about mortgages or the buying process or home ownership altogether.
Yeah, there's so many things that we can discuss. The one thing I can urge clients to do is, if you're ready to buy, find the home that you want, whether it's a property that was renovated or a brand new home, or one that you want to renovate. If you're in a position where you can buy, don't wait, because waiting You know, if it's a matter of qualifying, that's a different story, or your credit or what have you. But if you're ready to buy, it's a great time because you can start to, you know, build you know, your worth. I mean, you talked about it the other day where you said it's not just buying a home. You want to help your clients, you know, establish wealth, and that's where it starts. I mean, I have so many clients who now they're buying, you know, everybody's into flipping properties because they've seen the shows and like, hey, you know, I can do that.
Absolutely.
And I've seen it firsthand because on the renovation side, I deal with a lot of contractors, and so I see that people can get in and do it so it doesn't cost them an arm or leg, and then turn around and walking out with,
Yeah,
you know,
nice
20,
little
50, $100,000
more than they
so
had
it's
before.
right.
Absolutely.
I mean, we had an open house a couple weeks ago where that was a property that was purchased, and they did a
Very
phenomenal
nice. Yeah,
phenomenal job.
nicely done.
Yeah,
Very
so
nicely done.
so if you're ready,
Mhm.
pull the trigger and
Awesome.
just do it.
Awesome. Well, thank you so much, Mark. I really appreciate you coming
My
through.
pleasure.
We'll be doing business soon anyway, so I'll be
Absolutely.
calling you later.
Absolutely.
But I think that is all.
Wonderful. Thanks, Cynthia.
All
Appreciate
right.
it.
Thank you, Mark.
Okay.
Bye.